Broadcast. Welcome to the Zaner MarketCast quick update. Today we're going to talk about the analyst estimates for crop production, supply and demand, and quarterly grain stocks, which come out on Friday, which is tomorrow at the time of this recording at 11 a.m. Central Standard Time. My name is Joe Nikruto. I'm coming to you from Zaner Ag Hedge. Before we start, we want to let you know that if you are interested in hearing about grain market price action and strategies daily, you can sign up for our Zaner Ag Hedge hotline, hosted by none other than Ted Seifert, expert market strategist, totally free, gives you the chance to connect with us personally if you have specific questions about the markets or agricultural commodity price action in general. If you are interested in learning more about how this price action works and how to make it work for you, it is a perfect way to take a first step and contact us directly. Link is in the description below to sign up for that. Totally free, zero commitment. So tomorrow's report, kind of a big one, a number of things going on. We're trying to get a handle on it. And as always with government reports, you have some wild cards. You never really know how it's going to play out. We're going to take a look at some analyst estimates. Let's start with the USDA 2024-2025 U.S. grain and soybean ending stocks. What we're looking at here, analyst estimates for wheat coming in billions of bushels, 0.799. That's slightly up from last month's estimate of 0.795. Corn, ending stocks number looks to be coming in 1.675, down a bit from the 1.738 last month. And beans, 0.457, which is also down from that 0.70 last month. We jump from ending stocks to crop production for beans and corn, and also yield. Analysts looking for a crop production number for corn coming in at 15.095, which is down from the previous estimate of 15.143. Yield number for corn coming in with a range, interestingly, 181.3 to 183.7. The yield, 182.7. That could be a number where we see some fireworks. Hard to say. Previous month's estimate yield 183.1. Harvested area 82.638 is the average of the analyst estimates. Sort of right in the middle there, 82.2 versus 82.7. Last month's 82.710. So harvested area coming down, yield coming down a bit, and crop production coming down a bit. In beans, your crop production number 4.453 versus the 4.461. Yield number coming in at 51.6, which is down from 51.7 last month. Harvested area 86.3, which is up slightly from the 86.271 last month. From there, we jump over to world grain and soy ending stocks. Million metric tons is how they present this number. Wheat, analyst estimates 257.86. down just ever so slightly from the 257.88. In corn, 294, your world ending stock number in corn, 294.8, down from the 296.44. Beans, 132.20, which is up from the 131.87 last month. Jump from world ending stocks to South American production. Analysts have an estimate of 50.54, looking at Argentina in corn, 50.54, which is down from 51. Beans, 51.91 in Argentina, which is down from 52. Corn numbers for Brazil, your production numbers in corn for Brazil, 127.05, which is up slightly from the 127 number we saw last month. Beans, 170.28, which is up from 169 in the previous report. Quarterly grain stocks, as of December 1, wheat, 1.565, which is up from the December 1 number, which was 1.421. For corn, 12.147, down from the previous number, 12.171. And beans, 3.231, which is up from the 3.001 number we saw in the previous report. That was a quick update on what our analyst expectations are, your average of the estimates for tomorrow's WASDE supply and demand, crop production, quarterly grain stocks. May bear mentioning that technically in corn, you kind of got to look at the fact that we're at the top end of the range, 3 cents off the top of the recent range. 3 trading sessions ago, I believe we posted a 459 3/4 in March corn. Today's last trade, 456 3/4. You've got a 10-day moving average at 455.5. You've got an 18-day moving average at 415 1/4. Talk that speculators are looking to be buyers on any break in corn should leave corn technically well supported. We'll see what happens after tomorrow's information update. Could be that all bets are off. In beans, story is slightly different. Last trade today, of course, 996 3/4 in March beans. Recent high was, or today's high rather, right about 10. And your recent high in beans, 1015 3/4. I think some analysts looking for a retracement level there, like a 62% retracement level there that puts that like 1016, 1018 resistance overhead in beans. Beans have shown a propensity here in the last few trading sessions to not be able to close over what I consider to be the magic number of 10. You can't close over 10. You can't get to 1018. The bean market has also been constrained technically by bumping into, this is the third time we bumped into the 100-day moving average and we can't seem to get over it. Tomorrow, if we catch some sort of surprise and we want to jump up toward 1018, that's a battle that I think everybody would welcome, an opportunity for beans to try to carve into that overhead resistance. Your 18-day on the other side of that coin is at 988. If you don't hold that 988, you've got some semblance of support underneath, but largely that chart points back to 950 or the swing low, the bottom of this, where this rally started, which was 947. Looking at this from an educational perspective, we're oftentimes talking about, okay, you've given us some interesting numbers. I've got some beans in the bin. Let's just say from an purely educational perspective, as we can't really offer any advice because we don't know what your risk profile is. We don't know what your profitability picture looks like. But generally speaking, from an educational perspective, hopefully Carter will flash the disclaimer on the screen so we all get a handle on the risk. But let's say you've got 5,000 bushels of beans in a bin. That's terrific. You've got an asset, great work. But along with that asset, along with the control you have with those beans in the bin, you also have what? Price risk. And so one way to manage price risk, one of the things that we engage in here is helping producers manage that price risk. What if the price of beans goes down? You stand to have less money when you ultimately sell those beans. That's the risk. One way we manage that risk is we use options. Other traders use futures. Certainly for some customers, we engage in that as well. But the neat thing about options is that you can understand, you can quantify your risk, and you can avoid the hassle or anxiety associated with getting margin calls. And so for our example here, we've got 5,000 bushels of beans in a bin. We've got a report tomorrow. Maybe the report sends markets lower. Maybe it sends markets higher. We want to be protected against the downside. In this instance, let's take a look at the option markets. And so with agricultural options, we have what are called weekly options. That means that there are options that expire, in this case, every Friday throughout the calendar month. Today, I'd like to take a look at January week 3 bean options, which of course trade off the March bean contract. Today's March price, last trade today was 996 3/4. So let's take a look at a Jan week 3 bean put. That option expires in 8 days. Not tomorrow's Friday, but next Friday. So you have downside coverage for 7 days. A lot of folks would say 7 days, Joe, that does not seem like a tremendous amount of time. And that's correct. But with this report, you might be able to strike a balance between paying a lot of money for insurance and finding a value area that lets you be protected for what I believe are going to be a very important 8 days. So we're looking to purchase 8 days worth of protection. Last trade on a 990 put that expires next Friday was 8 7/8. So let's call that 9 cents. You're going to spend 9 cents. 9 times 50 is $450. You're going to purchase an option. You're going to purchase this put if you believe the market could be setting up for another leg lower, or at least a test of that 950. 990 week 3 puts gives you an opportunity the option could potentially increase in value on any move below 990, and especially below 991 is where this option should start to be profitable. And so you think to yourself, okay, I've got 5,000 bushels in a bin, just to review, and I've got price risk. What can I do to protect myself for the next calendar week? You can easily use the January week 3 990 puts and be covered for the next 7 days. Now, whether 7 days is the right amount of time, or 40 days, 44 days with the March options, or 120 days with May options, that is usually worked out in conversation and depending on your feeling about where beans are going and the length of time before you think you might sell those beans. A couple things to consider that we would definitely want to discuss. But again, purely educational, just numbers. We look at an option that will expire next week. You're going to pay 9 cents to have the privilege, the right, not the obligation, to be short beans from 990 at expiration next Friday. And so the cool thing about these options is that they're not going to be marginable. Does that mean there's no risk? That does not mean there's no risk. You've still got $450 plus commissions worth of risk that you want to consider should you decide to put up a business position like this. But you go to bed, I like to say, you go to sleep with $450 worth of risk, you wake up with the same $450 worth of risk, no matter where the market goes. And so that is a very comfortable way, a way that is easy for you and easy for you to wrap your mind around getting some semblance of protection, some degree of protection, should it fit your enterprise and the ideas that the things that you're trying to cover. 9 cents times 50, $450. For comparison, let's look at a 990 March put, which doesn't expire for 43 days. That time, right? We all know, folks that look at options, what do we say? The more time in the option, typically the more expensive it is. And so in this case, just as purely as comparison, not better or worse. In this case, purely for comparison, we look at a March put. If you think you need 44 days, that option is trading 19 cents. So 19 times $50, about $950 per 5,000 bushel contract. 43 days to expire, more time equals more money. The point of all this is just to remind producers, if you're watching this video and you do believe that you have exposure, just through a few conversations, we can easily get you the information that you need to begin to understand the ins and outs of puts and calls, and maybe put these kind of instruments, these financial instruments, to work for your enterprise to help you manage the risk that you have from the work that you have done, from the positions that you already have in the market. If you have 5,000 bushels of beans in a bin, you already have a position. And this is a way to hedge that. So what we've talked about here is basically hedging 101. If you have any other questions, if there's anything that we can do to assist you with getting this kind of information right, we can speak over the phone, we can talk, and you are not obligated. You don't necessarily have to open an account. You don't have to move any money. It doesn't cost you anything. It's very easy. We're always happy to speak with producers. You can call me directly. I'm Joe from Zaner Ag Hedge, 312-277-0124. I always look forward to speaking with agricultural producers and folks in the agricultural community. Thank you for listening to the Zaner MarketCast quick update on tomorrow's WASDE report. If you need more because you just can't get enough of us, and who can really, you can follow us on Facebook at Zaner Ag Hedge, or on Twitter, LinkedIn at Zaner Group. If you have any questions you'd like answered, there will be a link. You can always visit us on the website, www.zaner.com, and click on the ag section. Another easy way to get us to contact you, or for you to contact us. Always happy to hear from you. Thank you again. Be sure to like, comment, and follow the podcast to not miss a beat. We will be back with you as price action develops. Have a great day.